JB here, JB here. Hope everyone's doing outstanding. Friday, June 23, 25 p.m. Talk really quick about the market. Some names I'm looking at go from the S&P's down about a third of percent here. And looks like we might have a red week. It was flat as a pancake at about 2 o'clock. Well, actually about 1:30, pull down to 592 and change on the SPY, a little bounce, and then back here again at 593.81. We'd love to see a 35-minute last end of day surge to push the SPY back into the green and over 595, but doesn't look like, well, we'll see what happens. Like I was saying on the watch list this morning, we're kind of going to be stuck in this news catalyst vacuum next week. So who knows what they're going to fill it with. Uh, it's the end of the quarter, end of the half, end of June. So it's going to be all around the trade war, tariff war, which seems to be in the rearview mirror right now. Geopolitical tensions with Iran, Israel, is the U.S. going to get involved, and then other outlying headlines. So hopefully we get a nice tradable environment. There's no crazy shenanigans. No, I mean, how many different headwinds uh, have we faced over the last 6 months? I mean, gosh, they're already back at it today. I see headlines around Fed Chair Powell. Remember Trump was saying he was going to fire him, right? And that was a huge weight on the market with all the things going on already with the tariffs. And now I'm sure maybe they'll fill the news vacuum with that next week. Maybe there'll be some rumors. But needless to say, the biggest amount of notional dollar amount of options expiring today. Triple witching, it's not even a quad witching. And oh my gosh, it looks like somewhat of a normal session outside of it's a red day, right? So who knows if we'll get some last minute crazy swings? I don't think so, but still somewhat of type range. If you didn't know it was triple witching, I don't think, unless someone told you, you wouldn't notice it in the market, and probably a good thing. So that's kind of the overall market. I said 595, 604. I'll keep those ranges. We're under 595 here. I was looking at SQQ and maybe some V puts, but I mean, it's not like things are swinging. So even if I did get the puts, they'd probably be in the red. So just holding what I have, and that's kind of the plan for now into the weekend. And I'm not holding too much, right? I don't have a ton of positions on, so it doesn't make sense to hedge unless you have position, especially if they're solidly in the green and you don't want to lose them, right? That's kind of at least how I trade it. All right, so now just quick on individual names. Dell, I thought Dell was going to have a chance of getting all the way up to 120 today. It spiked at the open, it was 118 and change. Then it gave it all the way up to 119 and change. Then it started to give it back. So I locked the rest of my spec lotto calls in for over 150%. And then I still have the July strikes. And kind of disappointing to see the July 130s, and those are freebies too. I locked some of those in already to not see the premiums go up as much. Considering, I mean, at times when it was almost near 120, the calls didn't move much, and $10 out of money with plenty of time left. I thought there would be like $1.75 instead, and I didn't even take a quick peek what they are. Yeah, I mean, they're still about not even a double. So I don't know. I don't know if that means I should add some more. I'll probably wait till next week, depending on the action. But I really love the setup here, and you see the pincher. The pincher just started, right? So when you have a breakout on a pincher, uh, the meat that you make, like the meat is still on the bones to be eaten. Like the start of the pinch, that's just the beginning. When it really starts to move, that's when the big bucks come in, especially on out of the money strikes. So maybe next week, depending on what the action looks like, gets over 120. I'll look for some more strikes to play for a move, maybe to 135, 140 in the coming weeks, if not higher. That's down then Reddit. Same thing. It's like the same old with Reddit. Every morning it seems to squeeze right out of the gate, like someone's just ready to buy, and then they run out of ammo, and then the stock sells off. So, uh, thankfully, ran into the open. I thought it was going to break 150. Got close. I think it was all the way up to 149. Locked the rest of my 140s in for close to 100%. And it was already a good monster trade this week. So figured it doesn't make sense just let those expire. And I was actually looking at like 165s for next week, but then it was kind of like chopping around. I'm like, this is going to probably fade. And that's what it did. So maybe next week I'll revisit the 165s. I think they're like 130. I didn't even look to see what they are right now. But I figured if there's continuation next week, I was saying on the watch list and the ran all week. Once it breaks 130, it's going to be 145, 150, 160. So I still think that's the case. It's just tough to figure out. Yeah, wow, the 155s are down 50% today on Reddit, and the stock is only down 0.6%. So just shows you how much premium is in these calls for these moves. So definitely a name I'll visit next week. So that's Reddit, that's Dell, and now Lemonade here. So finally back in the strikes. I mean, it was already a nice trade. I had the June 45s; those paid out nicely. Uh, uh, that was last week, right, or the week before. And then I've been waiting, and then I had that 7% pull. I think that was on Tuesday, and then kind of like a reversal on Wednesday, and then continuation here today. And you look at some of these names, and I don't know if OSCR is kind of similar. It's like AI for healthcare, but Lemonade's AI for insurance, right? And here's a name that's very volatile, highly speculative in regards to, you have analysts who think it's a zero, you have analysts who think it's severely undervalued. I mean, it's growing at like a 50% compound 5-year compound annual growth rate, and it's like a misunderstood story in my opinion, which leaves opportunity. So that's why you see me continue to look to try and trade it. And then when it has some moves, they've been pretty wild. So I was looking at the August, then I was looking at the July, and then I finally got some July 50s, and I went further. I got to July 55s because I think if it starts to move and it's already, those calls are already solidly green, that if there's continuation, it's going to squeeze. Still has a high 28% short interest. And then I was just, I just throwing out some crazy numbers. Back at the end of last year, I think it was not November, October, late October into November, stock was 1875, ran all the way up to $52. So you take that same move, and if it gets it back up to 52, it goes to 100, 140, I think is, no, maybe it was $124. Not saying that's like a crazy number. Like half of it's being sarcastic, but the other half is it probably could do that if it gets some momentum. And then, you look at just its growth, the market opportunity. I think it's one of those names that's undiscovered. And one of these days, like I hate to, and I always say I hate to use comparisons with like Hims and Hers, but Hims and Hers was kind of the same situation. High short interest, misunderstood. A lot of folks thought, hey, they're not. It's not a brand that's going to be able to entrench on the market. And then boom, that story took off. Lemonade's already had its ups and downs, and of course some of it with COVID and what have you. But I think it's coming. I think it's back. So hopefully I'll get the opportunity to lock some of the strikes in for over 100% come Monday. And then if it starts breaking out, if 52 is the big spot, it breaks 52, it's onward and upward. So up another 9% here. That's a good one. You take later dated as well, longer view on it as well. I mean, just resilient. And the higher it goes, the higher the probability that there's going to be some kind of major short squeeze. All right, so that's Lemonade. Just some other names, still eyeing GameStop. I still have underwater strikes. You have to think there's gonna be a gap fill at some point, right? And then all this talk about the stable coins, and then it's almost like GameStop's the trading action right now is going to lull people to sleep, and then one day we're going to wake up and it's going to be up 25-30% on some news or just because. So I don't want to miss the next move. So at some point I'll be in that, but still watching that. Still looking to add some later dated strikes on Joby's, still holding some freebie July, so I'll continue to hold those. And same with Serve, holding the 200-day moving average at 1046. I'll be patient on that one, but I think at some point that goes up to its gap fill up near $20 in February. That's that. And then these other IPOs, like back in the day, and I don't even know to give some examples, but there was like a time frame. I don't know if it was 2015 that I used to call them IPO smash ups, right? And here's one of them. And if around for Beyond Meat, right? I mean, there used to be jokes about it, but the stock IPO to $25. A month later, it was $225. And there's been a lot of examples. Roku was a similar IPO smash up, except Roku waited for its first earnings and then went from $18 all the way up to like 60 or 70. There's other ones. Shake Shack was 20 something dollars, went all the way up to 100. And these are very short duration moves. So you have these moves because a couple of reasons, right? There's not a lot of outstanding shares. People want to get some action and get action on the IPO, and then they just buy, right? And then you got funds, folks getting in, and then people can't get out because there's lockup periods and what have you. So I'm trying to think of all the examples over the years. So Circle, Great Trade, Seb, and all the other folks who might be in. I was looking at calls, and you look at the premiums, it's like insane because so Wednesday closed at 199. If you bought the July 18th monthly strikes on Wednesday before the close, and then it rallies 24%, your calls are, let's see what they are right now, because I wasn't even pulling up before. I was pulling up the weeklies. Yeah, well, your July calls are up like 80%. And when I take that with a grain of salt, right? Because when you're holding those calls, you have the risk, right? So you have the risk that it goes down to 150, right? But you also have the reward that it goes up to 250, and it went up to 250, and the calls are not paying you for that risk, So to me, like how you trade, and I'm not a registered investment advisor or what have you, but you go out and you buy 100 shares and you sell covered calls. If you think the volatility is going to come, A, the volatility is going to come down, and B, you don't care if it does go to 300, you lose your shares. The reward is the premiums are so insane right now. You go out to the July strikes, the 300s, right? I mean, the 300 calls are $33. The stock's at 245. So I mean, that's a lot of premium to be paid on a strike so far out of the money. I mean, maybe it goes to 600 bucks, right? I mean, you never know. But at least your risk is that you just get the shares get called, right? So anyway, that just is a pretty interesting stuff. I just me to try the best way. I don't know. It's tough to see where that when the merry-go-round ends, right? When to get off, and at some point those are going to come back to earth. But same with CoreWeave, right? You would think at some point, uh, you know, you thought maybe that merry-go-round ended, and here back to life. So that's my little rant on the IPOs, and we'll have to keep it. The thing is, there hasn't been a lot of IPOs recently, right? And I mean, maybe it was 2014. I got to think of this time frame when there was a tremendous amount of IPOs, and it was like every week there was a new IPO, and you're like, okay, time to get get on board. And gosh, I'm trying to think of the days too. You would wait for you get your alert on E-Trade or whatever it was, and like, hey, you can get an allotment of this, and that the day you get it, and then that day you sell, and you're up to 100% without much due diligence or whatever, right? It was just how it went. So I'm not saying we're back to that, but anyway, folks, have a great week. I'll be back on audio later. Rock and roll.